I could care less about Bitcoin. I don't know why I said anything about it. The blockchain is a technology, which is a good technology. We actually use it. It will be used for a lot of different things. God bless the blockchain. Cryptocurrencies and digital currencies, I think are also fine. JPMorgan moves $6 trillion around the world every day. We don't do it in cash. It's done digitally. If it can be done digitally with the blockchain, so be it. But it'll still be a dollar cryptocurrency. What I have an issue with is a non-fiat cryptocurrency. Dollar, so crypto, sterling, euro, yen, they're all fine. I don't personally understand the value of something that has no actual value. You all can do whatever you want, and I don't care. Okay?
All right. That sounds definitive. Bitcoin hit a new high today.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day. I've also told people that it can trade at $100,000 before it trades to zero. Tulip bulbs traded for $75,000 once, something like that. The only value of a Bitcoin is what the other guy will pay for it. And I think, honestly, I think there's a good chance that Bitcoin, a lot of the buyers out there are up there jazzing up every day so that maybe you'll buy it too and take them out. And I quite mean that, by the way. These people are very good at manipulating the press these days and getting news out. And so every day, you have CNBC, nonstop Bitcoin. Who cares about Bitcoin? I mean, the world economy is so big. We move, JPMorgan alone, these companies, $6 trillion. We move all this money. And Bitcoin in total is, all these currencies are $50 billion, maybe $1 billion trades a day. And the other thing I've always made of Bitcoin, governments, and this is not a technological statement, governments are going to crush it one day. Governments like to know where the money is, who has it, and what you're doing with it. And in case you haven't noticed, okay? And governments like to control their currency, like to control their own economy. So China's already put curbs on it. Japan, they say Japan accepted Bitcoin. No, they didn't. What I gathered Japan did was they call it J-coin. It's a yen cryptocurrency. It's not a non-fiat. And there's a big difference. People have said legitimately, okay, it's close to gold. Not really. Gold is limited and has been around a long time, and it's close to a fiat currency. Not really. A fiat currency is where the government says, this is your legal tender. You have to give it and accept it. And there's a central bank. Now, of course, they can misuse it, the central bank, and inflate it. So there is a use case for Bitcoin. If you live in Venezuela, North Korea, or if you're a criminal, great product. I mean that. It's better than cash or deposits in that country, Cuba, But this is the last time I'm ever going to answer a question about Bitcoin because I really don't care. I also pointed out when I made that stupid statement, which got all the thing, I called it fraud. My daughter sent me an email saying, "Dad, I own 2 Bitcoins." My formerly smart daughter.
Federal Reserve Chair Jerome Powell has been testifying on Capitol Hill this week. And on the topic of cryptocurrencies, the Fed chief was pretty clear. He's no big fan of digital coins, especially stablecoins. Now, stablecoins, remember, are a type of cryptocurrency pegged to an asset, such as a fiat currency like the US dollar or commodity like gold. This is what makes them less volatile. And these non-governmental digital tokens are gaining traction, both for domestic and international transactions. I'm told that part of the appeal of stablecoins is that the financial sector in the US is one of the most encumbered and heavily surveilled of virtually any Western country. This is what scares central banks like the Fed. Governments in general don't love the idea of a large portion of commercial banking activity flipping over to this largely unregulated world. That's where central bank digital currencies, or CBDCs, come into play. More than 85% of central banks around the world are considering launching their own digital versions of their national currencies. The Fed, for example, is considering launching its very own digital dollar. In fact, Powell told the House Financial Services Committee that the country wouldn't need stablecoins or cryptocurrencies if there were a digital US dollar, a project that he says is moving forward. But like them or not, central bankers do agree that stablecoins are here to stay. Data from the block shows nearly $110 billion in total stablecoin supply, and it remains on a swift incline. Ensuring that regulation keeps pace with this growth is a key priority for the Fed.
Okay, before we go, let's get to today's numbers round. We'll start with 72. We have one more piece of crypto news to share. You remember the amazing run Dogecoin saw earlier this year? Well, the co-creator gave his perspective on the state of cryptocurrencies via Twitter, and he is not a fan. Specifically, he called out the industry for being controlled by a, quote, powerful cartel of wealthy figures. And to his point, analysis by Glassnode found that 2% of Bitcoin holders own nearly 72% of the wealth. Next, 25. Wealth inequality is also popping up in the labor and housing markets. New data from the National Low-Income Housing Coalition shows workers need to bring in around $25 an hour to afford the average two-bedroom apartment in the U.S. For a one-bedroom, they need to make about $20 per hour. But the problem is the average hourly employee makes just $18 and change. That means that most full-time hourly workers can't afford rent in any state.
That's why the U.S. government is about to wage war against a new booming class of cryptocurrency called stablecoins. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. On Monday, Treasury Secretary Janet Yellen convened a meeting of top U.S. financial market and bank regulators to discuss what the government should do about a new category of cryptocurrency called stablecoins. While Bitcoin and similar cryptos get the headlines, it is stablecoins that governments and central banks really fear and will fiercely fight. Unlike Bitcoin and similar cryptos, which fluctuate like wild roller coasters, stablecoins are tethered to a real asset, like the dollar or gold, which means they can be easily used for everyday commercial transactions as well as for long-term contracts. Nobody in their right mind would take out a mortgage denominated in Bitcoin, where you could end up owing 10 times the price of your house. This new class of crypto has exploded from a total value of $28 billion at the beginning of the year to $110 billion by May, and their use for commercial dealings is mushrooming. No wonder. Done right, they are the equivalent of cash. One can see how they'll pose a mortal threat to current payment processing systems today, which are complex, cumbersome, and costly. Thanks to blockchains, stablecoins cut out the middleman. For instance, credit card transactions typically cost merchants 2 to 3%. With stablecoins, those fees go out the window. Stablecoins will vastly ease cross-border trade and remittances while eliminating the customary fees. The ultimate savings for consumers and businesses could come to literally hundreds of billions, if not trillions of dollars a year. This would free up enormous sums of capital to finance new businesses, as well as substantially increasing product-producing investments in existing businesses. The standard of living for all will increase meaningfully as a result. The ostensible purpose of the Yellen gathering sounded benign and proper, and I quote, "Bringing together regulators will enable us to assess the potential benefits of stablecoins while mitigating risks they could pose to users, markets, or the financial system," end of quote. Some common sense regulations are in order, particularly in ensuring that a stablecoin issuer actually has the assets to back up its coins, just as investors need insurance that a money market fund really has the assets it says it has. But don't be fooled to the real agenda here. Regulators are waking up to the fact that stablecoins not only threaten existing payment systems, but even more fundamentally, they also threaten the very monopoly governments have on issuing currency. Governments want no challenge to that monopoly. The fireworks here are just beginning.